Well, hello, agents. Hello, everyone, and welcome to Friday. It is the end of June. The 10-year is holding on. It's doing its best not to drop, but didn't do good enough. We did have some MYGA rate decreases for the month of July and actually the end of June. So let's go ahead and jump into this is a review of kind of what I went through this week in fixed annuity. So what traditional fixed annuities we're doing this week. So let's go ahead and jump right into that. So we have, first thing I talked about this week were immediate annuities. We got really into the immediate. I decided to tell you about some things that most people don't know about the immediate. Like you can do a 30-year guarantee. So what this illustration here is a 30-year guaranteed income. It's a 360-month single premium immediate annuity. So that basically you put the deposit, right? Your client puts a deposit in and is going to get 360 guaranteed payments. In this case, it was a $1 million premium. As you can see there, it's a $1 million premium, and it's going to kick off $5,410 a month for 30 years guaranteed. So the minimum return on that, or the guaranteed return on that, is $1,947,000, right? So day one, you put this money in, you got two things happen here. You got this $5,410 for 360 months and a guarantee. You just made $900,000. You made $947,000 in gain. So you're going to be able to spend that $1,900,000 over systematic equal payments for 30 years. And it doesn't matter. There's no life contingent. Anyone dies, it's going to pay to the heir, the beneficiary to the state. This thing's going to pay 360 months no matter what. So that's the 360 month immediate annuity. That's from an A-plus company. And of course, if it's non-qualified money, the thing about SPIAs that no one really understands or talks about is it has if it's non-qualified money, the tax exclusion. So half that payment would be actually not taxable in this situation if it was all cash, right? So if it's qualified money, you can't do these things. You're limited on the qualified money because of death benefits and stuff. So it's really great for non-qualified money. And just you want a guaranteed income, for 30 years, there you go. This is life-based annuities. This is from an A-plus company, and just kind of like a quick look at some basic numbers. So this is based on a 65-year-old male, single life only. Give him about $643 a month. That's about a 7.72% of your money coming back. Life only is the most dangerous annuity there is. If the person died after one payment, they lose the whole $100,000 minus the $643 payment. So very dangerous, that one, but it does return the most. Usually there's a life insurance contingency to that. So if they die, the life pays, so to protect the client, or there's no beneficiaries, and this is something they're okay to gamble with. Then the life intent is a little lower. It's about, $12 a month less because you're guaranteeing that payment for 120 months. And then the refund, right below that, you have the installment refund, which guarantees your premium. So it's $623 a month for that same 65-year-old. But if they died on the first day, that $623 would continue till the 100,000s were paid, right? And then there's the joint numbers, 265-year-olds, 75-year-olds. It's not the greatest layout there, but anyway, that's just kind of an idea, ballpark of where these numbers go. Of course, everyone's going to be different based on your date of birth, deposit, and all that good stuff. So next we talked about a 2-year annuity. Again, here's one of the ones that this was from 617 rate, but we talked about it again. This rate is now 5.35. It did drop for the month of July. So 5.35 there on that 2-year. Still not a bad rate. It has the 10% free withdrawal. It's a walk away after. It's got a 3% minimum guarantee. And then we have actually this one I think is still 550. Let me double check. Yeah. That one's still 550. We have another 550 that went to 535. Here's a 5-year. This is the 5-year we were talking about. This is an A-plus company. This 5-year was 550. It has been reduced down to, as you can see, it reduced a quarter point on 627 to 5.25%. So this is still a good deal, though, if you ask me. It's a walk away, right? So after the term, it's non-repeating surrender charge. It's $100,000 minimum to get this rate. It's 25 basis points less, so 5% if you're under 100. The rate is 5 basis points lower in these states because of certain contractual things there. And yeah, that's a good one. A-plus company. So yeah, 5.25 this month though. 3-year, this is a brand new product with limited availability. It's only available in these few states, but it's 5.75% for all 3 years. It's a walk away with the 3% minimum as well. Next, we have, this is for the month of July. We now have, let me lock that. Hold on, we're unlocked. Okay, so we have this 560. It's 250,000 or more, of course. The rate, you can see the rates down here for under that amount. It's 545 and 535 at 5,000. But 5.6 on a 5-year, it's got a 5-year surrender, then a 30-day window. As you see, there's a 30-day window. And then you can exit after that. Or it renews for another 5 years. And then it's liquid after that. This product, I think it has like a 2.95 to 3% minimum guarantee. It changes monthly. It's not available in Utah or New York. 10% free withdrawals, pays a good commission to you agents. There's some disclosures regarding that. So yeah, anyway, that's just kind of a quick breakdown on what we went through during the month of last week, just the last week. So, and also if you could follow me on my LinkedIn page, and you'll see this is where it was. Like all these are here. I kind of go through a little explanation if you want to read about it on all these. So it's really good to follow my social media because I can put things out more regularly. Like insurance companies, I do other news articles and stuff that I don't talk about on my videos. Like what's going on with insurance and the cost of insurance and stuff like that. We talked about the stretch IRAs and the stretches. So there's more comprehensive stuff going on. See, this is only 3 days ago, and this is stuff we haven't talked about. That's right. Athene was rated, upgraded to A+, and we did see that. Another just a 65-year-old male there, SPIA. This is a issues to age 99 product. So yeah, there's a lot of good information on my, I received 5 rate decreases during the month. And this was another topic. See, I didn't even get into this. We had a lot of these insurance companies are playing afloat. It's taking, some companies are just like, we're not even going to transfer money for 45 days. We have 30-day rate lock. So, and then they snail mail this stuff. So we did a big talk, and this topic actually got huge. Look, I got 1,700 impressions, a bunch of comments on this. So it is a topic that the insurance companies and all the people in charge should really get on top of, is the time it's taking to transfer. You got 30-day rate locks with interest rates declining. It's going to take them 45 days to move the money. It's just their procedure. And then they regular mail checks that take 10 days to get mailed. That's not working in the best interest of the client, in our opinion. So yeah, and then we have a bailout annuity that's paying $585 for 5, and if it drops below $585 anytime during the 5 years, you can just walk away. So those are what bailouts do. And and that's about it. This was 1 week ago now. So yeah, that's it. Just a kind of an update of what I go through during the week with clients and with agents. And then I put out the ads, like what topics are important, what's coming, what to look for, what are the traditional products doing out there. Not so much the sizzles, more of the steak is what we work on, right? Because there's no fees, just insurance guarantees. So remember, follow me on LinkedIn and YouTube, X for the most up-to-date information. And I'll keep trying to do these videos as I can. But we've luckily been very busy, and I've been having to help agents design products and do quotes and stuff like that. So, that's really where my time needs to be spent, with the agents and the training and all that good stuff, and with the insurance companies that, value our marketing. And we like to talk about those guys too. So anyway, thanks for watching. Have a great weekend, and we'll talk to you soon. Bye-bye.